All right, so who out there really struggles in trying to find good locations to trade on a daily basis? Okay. The ultimate goal is to be profitable as day traders, correct? But you can't not always just be clicking on your mouse left and right, okay? Because you feel like you need to be in a trade or you believe the area in which you're taking a trade from is correct, all right? You have to really be logical, sit back and analyze what's going on overall in the market to determine if that zone that you're marking, yes, we're talking about supply and demand because that's how I trade here on this channel. So if you're someone that's interested in really trying to define or spot on or locate high probability supply and demand zones, then please take the time and watch this video. I do not care if you're a beginner trader or an intermediate trader or even a professional experience level trader. If you come to this channel right now, you're watching this video, please watch it entirely because we're going to go over a few examples and I'm going to talk about what makes the difference, which I've said this time and time again, of a low probability versus a high probability setup. And we'll take a look at a couple examples as well. Sit back, watch the intro, and we'll jump right into the video. Now, every one of you guys out there who are current community members, either part of the channel here or on the Discord, and hopefully you are a member of both. And if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button down below. When you click on subscribe, you will see a bell, okay? Make sure to click on that bell as well so that you never miss one of the uploads here on this channel. This channel is packed, okay? All right, with tons of great content and valuable information that I push out, over this platform for free. And as well as you can join the Discord. Okay, we have a great community filled with great members, and you can join that community by simply looking down in the description portion of this video and clicking on the Discord link and invite yourself in. All right, but those that follow the channel in the community know that I have a certain strategy that I use to trade daily. Is it hard? No, you can ask anyone in the community. Very simple. I just look for a few things to happen and break a structure being, the number one thing, okay? That's the most important thing is looking for break a structure, okay? If I don't see it, then, it's not a go for me, all right? So I have to see that first, and then I want to see a high probable, well, I should say this, I want to see an area where there's aggressive buying or selling it, okay, coming out of that zone, all right? And then the last part is an imbalance, okay? So I'm not going to really, go into trade entries and talk about things. I'm going to show a couple examples of what I'm talking about as far as the setup itself, because people always ask, what should I be looking for when it comes to identifying supply and demand zones, okay? And we're going to talk about that so that, if you're someone that's currently new, you come from, maybe you just Googled on Google, how to find the correct supply and demand zones, ones that are high probability setups or whatever the case is. Hopefully you've come across this video or you have done so through YouTube and did the same thing in your search, okay? How to find high probability supply and demand zones, okay? Now, what I'm going to show you is universal, okay? You can use it no matter the chart, the time frame, the chart style. I don't care if you're trading tick charts or volume charts or time base or range like I do. And please, guys, the reason why I trade range-based charts, it has nothing to do with me not liking any particular chart style or chart type. It's just simply I started with range and I'm still trading it to this day because the range charts are just clean into my eye. So whatever works for you personally, stick with those type charts, okay? Now, let's go ahead and jump into the video because I just want to go ahead and show you a couple examples of just some zones and what to truly look for so that you can identify, supply and demand first of all. Yes, there are always, you'll see supply or demand zones across any level of charts, okay? It doesn't matter what if it's a lower time frame or a higher time frame, okay? The thing about it is you got to think, is this the right zone? It may not be the right zone because first and foremost, as I said in yesterday's video, one of the most important concepts to really become a good trader is to understand market structure. Now, if you do not understand market structure, I highly recommend you stop right now before you get yourself in trouble. Start putting money into an account, and then you start blowing through money. Look, I'm telling you now, listen to what I say. Heed, please. Understand, research, educate yourself on market structure first, okay? Then once you've done that, then that will help you grasp an understanding of the movement and what's going on behind the closed doors, so that you can see and understand the chess plays that are being taking place in the market, okay? Now, numero uno. The first thing that we're always looking for, that means number one for all those that don't know, what we're looking for is when we're trading supply and demand, is the market making and moving in one direction? We want to see, because supply and demand works best when the market's trending, okay, really. Not to say you can't trade, like I said before, in consolidation or when the market is ranging, but it truly works best if it's moving in one direction or the other, okay? Because the market can go, well, I shouldn't say go in two directions, because it can go in three. And I've said this other day on a video too, up, down, or sideways, right? But again, when the market is trending, making higher highs and higher lows, that's our best opportunity as supply and demand traders to be able to mark off key zones within the market, okay? Ones that truly make sense, okay? So the first thing to identify is to see if the market is moving in one direction aggressively, okay? And we want to see nice flow of swings up or down. Now, what we see right here, and I showed this other, I think, the last couple of days, but just kind of give you an overall perspective of direction to the upside. The market is high, higher, low, high, higher, low. It did retrace deeper here, makes a new high, pulls back, lower high, just to continue pushing to the upside. So we are doing what? This is on my 12 range chart, okay? So we're trending to the upside on my 12 range chart, just a slightly lower time frame. My higher time frame is primarily my 60 range chart, and it may be a 60-minute chart. Again, I am not saying one chart is comparable to the other, but just simply understand that you can look at your higher time frame or even a lower time frame to determine, is price bullish on the lower time frame or bullish on the higher time frame. It doesn't really matter. You just need to determine. But like I always say, understand if the market is bullish on a higher time frame, you want to trade on your lower time frame in that same direction, looking for interest to go long, okay? So being that we're bullish, making higher highs and higher lows, the next thing I want to see is a break of structure, okay? And you know what, guys? Some of you may be tired of hearing me say this and going over examples like this, but trust me, there are tons of people out here, probably thousands of people out here that are searching for this type of information, and I'm never going to stop pounding it because I want people to truly understand. For those that may be new, for those that may be trying to find a strategy, so that they can understand a good strategy that they can add to their own trading plan that works, okay? So the number one thing before marking off a zone or looking for a zone is to determine, like I said, are we pushing higher? Aggressive force, okay? Now, we see moves to the upside here, right? How you can identify and find, first and foremost, an area of supply or demand, in this case here, we're going to be talking about a demand zone, is if we get aggressive move to the upside. Now, for all those that don't know what an aggressive move is, that's where we get a great push or thrust to the upside with loads of bullish candles pushing to the upside, okay? Now, that's the creation of what marks a high probability zone, okay? Now, the zone is going to lie back within the swing from which the great push came from, okay? But first and foremost, we got to see the break of structure. So we got a push to the upside, a pullback, boom, blast to the upside, taking out the previous high here, okay, or the prior high right here with great force to the upside. Now, this is the zone right here, the demand zone, okay? And how I typically draw it is the last bearish candle to the downside, both the wick and the body, okay? All right? And you may get a green candle that may wick out the last red candle here to the downside, so include that as well. The bottom of that area, okay, to the top of that last bearish a red candle right there. So what we're doing then is just waiting for an opportunity for price to come back to that zone to see if it's going to reject there, correct? All right, so that's what we're waiting on, okay? So once price comes back there, again, that's when we are starting to really tune in and zoom in if the market is going to reject that area. But just because we have a demand zone, those that follow the channel know that that's not the full puzzle or the piece to everything, correct? If you really want to step your game up and really want to be on the higher probability side, okay, when it comes to trading, look to see if you have any imbalances, gaps back at that zone, okay? Those that have been following the channel know what imbalances are or gaps are. I'm not going to go in full detail about that, but just keep in mind that when you see an aggressive push to the upside, you've got to say to yourself, are retail traders doing that, or are the banks and institutions? Do we as retail traders have it in our pockets to make a move like this? No, we do not. Okay, I don't care if we collectively come together with you know, a large sum of money. Okay, we don't have hundreds of millions of dollars as collectively to push the markets. Okay, so anyways, what I'm trying to say is that we have to understand who's making that kind of move. All right, when we see a big push or a fantastic thrust to the upside like that, you've got to think that if there are imbalances or gaps in between candles as price moves to the upside, there's got to be orders there that didn't get filled, okay? Because the market is gapping up and is pushing higher. So the aggressive force with and then price coming back to that area, and look to see if there's an imbalance there, okay? And that imbalance just equated to, oh, are there additional orders that can be filled? You wait for price to come back there. I try to on this channel here to break things down as elementary as possible and not to make things so complex, because look, we all trade at different levels. I mean, not trade, I'm sorry guys, learn on different levels, but most of us learn visually, right? So that's why I try to break things down as simple as possible so that, you know, even those individuals out there that may have a hard time completely understanding, you know, what I'm talking about, I try to break it down so that you understand in full, okay? I'm not saying one person is smarter or stupider than the other. I'm not saying that at all. I'm just trying to say that we all learn at different paces and curves, okay? So by breaking things down and being as simplistic as possible, I found that it helps people out in general, okay? So again, the breaker structure, looking for the great thrust here and seeing if there's a gap or an imbalance back at the zone is very important. That's what's going to mark a high probability example, okay, all right, that you can find on any chart, okay? So this is the first example that I'm showing you, all right? So that's a decent demand zone that to mark, go ahead and mark it, look for the rejection when price gets here, and then take your shot to go long, okay? Not saying jump in the moment it gets right back there to it, but typically what I do is either at this point I like to see a break in the opposite direction when it comes to candles. Last red candle, next green candle to the upside that breaks that last red candle to the downside, I'm going long. Or I can scale down to my lower time frame and look for a demand setup off the lower time frame or a W formation, which typically signifies a rejection in the market, to go long, okay? Now, if we're looking for, say, for instance, a supply zone, I'm going to give you one of those examples as well. We're looking for the same thing, breaker structure, you know, aggressive force to the downside, and then a gap or imbalance back at that zone. That's what's going to clarify or provide a quality zone to mark, all right? So look for those type things. We're going to go over an example right now. So we've already covered an example of a demand. Now let's look at the supply, okay? All right, so here's a supply zone, okay, right here. I want to show this. What you have is the market moving to the downside here, okay? It has a pullback here, makes a low here, lower high. And actually, it's a similar high, okay, is the way I look at it here, okay, on the pullback right here. But price breaks lower. It breaks structure once it takes out this area at 90.5, okay? Now, what we want to identify is an area, a supply zone, okay? Now, we got the breaker structure to the downside, taking out 90.5, okay? And we're looking for an area where there's aggressive force that came out of the swing to the downside, all right? So we've got, first of all, the breaker structure, all right? Now I see an area here where we've got, you know, stacked red candles to the downside. That's aggressive movement to the downside with great force, all right? price retraces back. I'm going to go ahead and mark this area as a supply zone again, okay? Why? Because of when price moved lower before it broke structure here, it pushed with a lot of emphasis to try to continue pushing the market lower to the downside, and which it did. It took out this low right here. Retraces back to it. I'm going to go ahead and mark that. Retraces back to it. There's our little imbalances. So when you see great pushes to the downside, just as I showed you to the upside, and there's imbalances, think to yourself, there's got to be, if there's gaps there or imbalances in between on the push to the downside, in between these red candles, then it's got to be orders filled. Excuse me, not orders filled. Orders that need to be filled or left behind. So I'm looking for price to come back to that zone, and I got a little imbalance right here, okay, from this red candle here, and then the next candle that broke down and took out this red candle. In between this candle here, the bottom of this candle here, and this next candle that took it out, now this candle here pulled back some. There's a little gap in between the bottom end of this candle here and the top end wick of this candle right here. There's an imbalance resting right there. So I'm thinking to myself, okay, break a structure, nice demand zone with aggressive push to the downside. And, you know, if the market push hard like that, then the institutions are probably going to want to come back to this area and pick up the rest of their orders that need to be filled, right? So it gets back there. Look what it does. It rejects that area. At that point, I'm looking for a break of a candle in the opposite direction, or scale down to a lower time frame and start to see if you start to get maybe an M formation, which is the opposite. W formation on your lower time frame. Maybe you're trading off of a for me, it could be a 4-range chart. Maybe it's a 1-minute chart if you're trading time based. Again, I'm not saying one is comparable to the other, but I'm just telling you that you look for rejection to take your shot long. Short, not long here, because we're talking about supply. So then we're aiming for, at that point, for price to break down and break lower. Okay, it's as simple as that. But the rules are really, first and foremost, identify the breaker structure. Do you have aggressive force coming out of that zone, either to the upside when it broke structure, which you at that point would find or identify your demand zone? Then the third thing is go ahead. At that point, what you want to do is just go ahead and mark off in your chart like I've done right here with this rectangular box, your demand zone. But before you do so, the one thing you want to identify is there an imbalance or gap at that zone? That's ultimately what's going to identify if it's high probability or not. So please do yourself that favor. And then the opposite when you're looking for supply zones, high probability supply zones. Okay, guys. So those are just two examples, both a demand and a supply zone, and what to look for, regardless of the trading chart that you actually are using. Okay. So I just wanted to give that rundown today because it's the question that I always get daily. I have a hard time identifying or locating high probability supply and demand zones on my charts. Please, can you help me? Can you show me? Can you do another video on it? So this is the reason why I do this, I guess at least once a week, because I want people, because they're not going, lots of traders or people that are interested in the channel are not going back and watching, spending time watching the videos. And please, guys, do yourself that favor. And if you are, if you don't want to watch over 500 videos, then this is where I recommend maybe you want to sign up for the elite membership, because within that membership for $6.99 a month, I give you a list that includes links of videos that I truly feel provide great valuable information and cover the topics of questions that you may already have. So if you got $6.99, not $699, but $6.99, I would recommend, it's up to you to join the elite membership. How do you do so? Click on the join link that's next to the subscribe button. Somewhere up on the menu of the video, you'll see a join button or a link. Just click on it and then click on from there, click on elite membership, and you can join that way. And that's just one thing I'm talking about now. And what you get, you receive that video playlist, but you also get the trade breakdowns where when I post videos, I don't do them every single day. I need to get back to doing more of them, but there are tons of them already that provide live examples or real examples of trades that I've taken and posted on our Discord community for fellow members to see. I go back in the and create a video here on the YouTube channel that is private for the elite members only, so that I break my trades down and express things in detail so you grasp and understand it, an elementary understanding of why I took that trade and what led up to it. Okay, All right, so that way you grasp an understanding, so you can see things from my point of view. Okay, but that's all I have for you guys. If you're interested in joining, $6.99 a month, price of a cup of coffee. Please click on the join link. All right, people ask me that all the time. How can I become an elite member? I'm telling you in this video right now how to do it if you choose to. All right, outside of that, that's all I have for you guys today. I appreciate it. If you do not mind, please, first of all, take the time to sub to the channel. But secondly, and one of the most important things is drop a like on the video, please, guys, if you found value in the content. Again, drop a like by clicking on that thumbs up button. I appreciate it, guys. I'll see everyone in the next video. Take care and have a blessed rest of your day.